Noureldeen Al Hammoury is the Chief Global Market Strategist at Equiti Group, joining us today live from Dubai. It's good to have you. If oil holds around the sort of levels that we have seen of late, we've got WTI trading just below $100 on the barrel. The global benchmark significantly above that. What's the significance for the broader economy and its impact on these prices, these equity prices?
I mean, at least for the time being, is not a geopolitical noise anymore. It is actually a fear, and the strike that we saw over the past couple of days on the South Pars and the risk around the Strait of Hormuz is not just basically it is here, and this is no longer about just the deliveries. At the beginning of the war, if you remember, we talked about the issue is not with the production, it's with the delivery. Now, production is at risk, and delivery is already stopped for a longer period of time. So if the disruption continues or intensifies, especially around the Hormuz or the Strait of Hormuz, a move towards 130, 150 is still within reach, and the market is already reacting to it, to something we call the stagflation, which is something rare or very rare to happen. This is when you have basically higher yields or higher inflation. On the other hand, you'll have lower growth and higher unemployment. The 10-year yields, which is something very important, I think, for the audience to understand, is that today we reached 4.3%. This is the highest this year. And the stock market is getting also crushed, while gold and silver are also going down. This is the ultimate warning the bond market is giving us, because that stagflation is coming, and this will have an extremely, as I said, it's extremely rare, but at the same time, the economic outcome of it would be, don't like to say disastrous, but it is going to hit hard. It's going to hit everybody if it continues.
I'm really pleased you explain why it is that the gold and silver price is actually going lower, because the kind of received wisdom is when we see the sort of instability around at the moment, the hedge is a flight to safety, of course, into something like gold. But you are pointing out why we are not seeing that at present, and that is very worrying. Scott Bessent, and you'll have heard this just about a half hour or so ago, and again the alerts are going off here for our viewers' sake. It's just an indication of what both Noureldeen and my teams here in Abu Dhabi are going through. This is it's not constant. It's not every single hour of every single day. It's the first time over the past hours that we've heard it here specifically in Abu Dhabi. But you can see these alerts are going off as this place is attacked by Iran, both with missiles and with drones, and it continues. So my point was, at this stage, what are investors telling you? What are they asking you? And what are they telling you about how they feel at this point?
I mean, especially after today's move and after yesterday's the Federal Reserve decision, because, again, most of the administration, we have something that is inconsistency in the messaging, which is conflicting everybody. And this is the last thing the market wants to hear, an inconsistent messaging from the administration. The Federal Reserve was well balanced yesterday, kept rates unchanged, but at the same time, the dot plot showed that there is only a possibility of one rate cut this year instead of two rate cuts. In addition to that, the warning about inflation, we haven't done any kind of progress over the past couple of years. We're still far away from the 2% target. Now, clients are worried because everything is going down. You have gold, silver going down today. Dow Jones and S&P and Nasdaq going down. We have bonds are going down, yields are going up, and the only one thing that is going up currently is basically the dollar, which is a very typical setup during when you're talking about the war from one side, the risk of inflation, risk of.
Noureldeen, I got thrown when I was asking a question because these alerts went off. One of the questions I did want to ask you is Scott Bessent speaking to Fox Business just about an hour or so ago, and he raised the idea that the US may look at desanctioning, taking the sanctions off Iranian oil that is currently sort of sitting in open water, as it were.
Water.
Now, what do you make of that with your sort of, economist's hat on when it comes to the impact that that could have on the oil price?
I think Brent reaching 120 earlier this morning, leading them to say that. Because, first of all, I think if we want to stop this war, and I think this is what might actually happen, is to push oil prices even higher for longer. Because everybody knows that the global economy cannot handle. We barely were able to handle the $60 before the war. How are we going to handle 120 now after the war? It's another verbal intervention from this administration to try to control the oil prices. Will it work? It might work on the short term. How much or how many barrels of oil is on the water from Iran, and how this is going to play out? So I think this is another conflicting messaging. Is basically, if you are going to unsanction the Iranian oil now, why didn't you do it from the beginning?
Noureldeen, it's great to have you, particularly as you're based, as I am here in the UAE. I think it's really important our viewers around the world get a sense of, what the thinking is here, as this region, of course, has been drawn into this sort of escalation that we see at present, significantly drawn in with the attacks that we've seen on energy facilities and infrastructure overnight. It's good to have you. Thank you, sir.